Gupta is with us, CEO and co-head Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you for your time. Prashant, this side. Just first sort of provide us with some feedback because, I mean, you're talking to clients on the institutional side, and mainly on the foreign side, if you can provide that. What are you hearing? I mean, this selling that we're seeing, what is that? What is this on account of? What's the dominating driver behind this?
Yeah, hi. Good morning, Prashant. Thanks for having me. I guess as far as the foreigners are concerned, from their perspective, a couple of factors to keep in mind. First and foremost is most global emerging market funds, they're not really getting fresh inflows. US interest rates are still holding up high. You're seeing China, the Chinese markets have started recovering in the last 1 month or so. Just for example, the Hong Kong market, Hang Seng, is up 15% in the last 1 month compared to our market, which is relatively flat. And also there's some, the usual concerns about India's expensive valuations. The Nifty, for example, is trading at about 20 times 1 year forward earnings. And that's actually prompted a lot of folks to take some money off the table. And lately, I guess in the last, say, week, 10 days or so, all the various media reports about some nervousness around the election outcome, which, although in the last few days it's sort of abated a bit, but nonetheless, there is some concern that one never knows with elections how they go, so why not take some money off the table? So combination of factors, along with the fact that by and large, barring a few stocks here and there, the earnings season has been a bit of a mixed bag. We're not seeing massive earnings upgrades to justify the high valuations. So it's just a little bit of, profit booking and taking money off the table, just at the margin, investing in other markets like China or Japan, ASEAN to some extent. So it's just a mix of various factors, no one single reason.
Okay, mix of various factors, no single reason there. Pratik, hi, good morning, and always great seeing you. One pocket that is coming back in a big way, and we've been discussing this through the show, is the rural plays, right? So even this morning, you've had Colgate come out with record high margins. Most corporate earnings that have exposure to rural markets, whether it's Hero MotoCorp, Dabur, HUL, all indicating that there is a recovery in that pocket. Is this a good theme to play over the next 12 to 18 months?
Yes, we think from a slightly longer term perspective, this makes sense. And you're right, in our conversations as well, when we speak to, at Kotak, we cover some 270 odd stocks. A lot of the rural focused companies are talking about some signs of either they're already seeing a demand recovery or they're expecting a demand recovery. And hopefully we have a normal monsoon as per the weather forecast. So that should also help. So by and large, yes, we are beginning to see signs of an improvement. But I'd still say that as of now, most of it seems to be hope. We haven't really seen the full-blown recovery as yet, but the stocks are beginning to price that in. They've moved up a bit, but we think there could be scope for earnings upgrades in the next 12 to 18 months. So yes, we are positive on the rural focus themes.
All right. Hi, Pratik. Good morning and good to see you in. I wanted to ask you about some of these stocks actually that have been ranked underperformers, but very high in terms of pedigree, management. They have a good track record on a longer term. HDFC Bank, Kotak Mahindra Bank, HUL, all of them big underperformers, but it's hard to ignore them at current valuations. What's your view?
Yeah, hi. Firstly, yes, on the valuation part, that's the general feedback we get from investors. But bear in mind, it's really the foreign selling which has really been impacting some of these stocks. These were big heavyweights in foreign portfolios, all the stocks that you mentioned. And as I just mentioned a minute back, we have been seeing very heavy foreign selling in the month of May alone. In the first 12, 13 days, we've seen about 34,000 crores worth of foreign selling in the cash market. And obviously in April and earlier as well. So valuations have definitely come off, and that's something fundamentally a lot of these stocks are looking attractive. I can't comment on Kotak given I'm conflicted, but HDFC or HUL, etc. But equally, the questions that are coming up is what's the trigger? So in the short term, perhaps there's no immediate trigger, and right now there's a fancy for going down the quality curve, whether it's the banks or the FMCG companies. The quality is not doing as well. Value is in the short term doing relatively better. But if you're an investor with a 2-3 year investment time horizon, then we definitely recommend these stocks for investors with a slightly longer term horizon.
Got that. Pratik, do you reckon that flows will come back, foreign flows will come back in a big way post-elections?
That's a great question, Prashant. In our conversations with all the sovereigns and the foreign long onlys and even some hedge funds, I think a lot will depend on, one, obviously the election outcome, assuming there's a stable government, no negative surprise. Firstly, most of that is in the price already. No one's really expecting a major change in the political establishment or a major dramatic change in the policies of the new government. So that's point one. A lot of it is already priced in, and our valuations, like I said, at 20 times 1 year forward, we're already pricing in a lot of the good news. Having said that, in our conversations, we do come across a lot of global investors who just want this event risk to be out of the way before they come back to India. And obviously, we've seen some money being taken off the table prior to the elections, and we could see some of that coming back. I guess the more interesting question is, even if there is some money that comes back into India after June 4th, assuming the same stability of government and so on, is whether the money will come back into large caps or whether the money will come back more into the mid and small caps. And that's where we're seeing very mixed views from a lot of investors, depending on whom you speak to. The large global investors who want liquidity, who want large ticket sizes, for them, they can't invest just $5, $10, $15 million in a stock. They're looking for minimum $50 million to have a position in a stock. So they will obviously gravitate toward the large caps. Whereas equally this time, because I guess generally there's a feeling that the China rally is more of a bounce, a dead cat bounce, not really a structural story. India is a true, real, medium, long-term growth story. We want to participate in India. So therefore, we think a lot of the money will come in to some of the India-dedicated funds or some of the EM ex-China funds or Asia ex-China funds. In that context, India could probably get a little bit more of the flow, and we think some of the mid caps and small caps should also benefit. So it'll be quite interesting after June 4th, but we do expect some flow to come in.
Okay. By the way, folks, this market is really piling on the gains, so don't lose sight of that. It's actually a breath of fresh air to see this kind of momentum on the upside because, it's been down days for many days now. Not the Nifty, but look at the mid-cap index, right? The index is up almost 1% and big moves coming in. Finolex Industries is up almost about 8%. You have loads of stocks that are moving up. Union Bank is up about 5%. JSW Energy is up 3.5%. And then you have so many stocks hitting fresh 52-week highs as well. We were talking about some of them earlier. Thermax is really the big gainer. Nalco is at a fresh 52-week high. Oberoi Realty. Pratik, I wanted your thoughts here. Real estate after almost a 10-year lull has come back in a big way. And some people may call it hyping up many of these premium real estate projects, etc. But the proof is in the writing, right? I mean, you can see many of these stocks hitting fresh highs as well. What do you do here? Do you think you can put more money to work in some of these names?
Yeah, we like the residential real estate plays, not the office property plays as much. But the residential side, we think there's scope for earnings upgrades. More importantly, we're seeing very strong volume uptake. It's not being driven by pricing alone. And a lot of these companies in the last down cycle, they've actually deleveraged quite a lot. Governance levels have improved quite dramatically. So to that extent, we like the residential real estate plays. We think there will be continued surprises in terms of the volumes. And pricing-wise, we're also seeing most of these developers this time around in this upcycle are being relatively more disciplined. Unlike, let's say, if you go back 15 years back, when there were pretty dramatic price increases being taken, which quickly made housing quite unaffordable. Even now, obviously, prices are unaffordable for a vast majority of the population. But the demand-supply gap is there. And we've seen a lot of projects which have only recently been announced in the last 1 or 2 years. The supply is yet to catch up. So there is still a demand-supply gap. And especially in the metro cities, and increasingly, we think this will spread to the smaller tier 2, tier 3 cities and towns as well, where we think demand will be quite strong. So, and the last angle I would put is the interest rate outlook. That also looks reasonably stable. If anything, perhaps you might even get a downtick in the later part of the year. But combination of a strong residential upcycle, which typically tends to last for many, many years, not just 1 or 2 years. And we're still in the early to middle stages of the residential upcycle, coupled with deleveraged balance sheets, strong volume growth. We think it's, and government policy also, we think will be supportive going forward.
All right, Pratik, always good hearing your thoughts. Thanks a lot for joining in and filling us in with those details. Looking forward to having a chat with you in the coming weeks, maybe post the elections.